The 2026 NBA Draft is about to create millionaires on paper and broke people in real life. A kid goes from a college dorm to a $30 million rookie contract in 24 hours. Everyone celebrates. Nobody does the math. Because when you actually do the math, that $30 million deal in New York or California can quietly shrink to $15 million in real wealth. Sometimes less. And the person who should be warning them about this, their agent, is financially incentivized not to. Here's what nobody in that draft green room is explaining. The United States doesn't have one income tax. It has 50, and some of those 50 are absolutely brutal. California's top marginal income tax rate is 13.3%. New York State plus New York City stacks to nearly 15%. Illinois hits you at a flat 4.95% on top of federal. These aren't small numbers when your salary has 7 figures. A first-round pick landing in Los Angeles on a 4-year, $30 million rookie deal will pay somewhere between $13 and $15 million in combined federal and state taxes over that contract, before they buy a single thing. But that's not even the strangest part. NBA players don't just pay taxes where their team is based. They pay taxes in every state they play a game in. It's called the Jock tax, and it is completely legal and completely savage. Every road game in California, New York, or Illinois triggers a tax filing in that state. A player can end up filing in 15 to 20 states in a single season. Their accountant's bill alone runs 6 figures. Now here's where the agent conflict gets uncomfortable. Agents earn roughly 3 to 4% of the gross contract value. On a $30 million deal, that's up to $1.2 million in commission. They get paid on the number, not on what the player actually takes home. So when a player is choosing between a $28 million offer from Miami, which has 0 state income tax, and a $30 million offer from the Knicks, the agent's commission is higher on the New York deal. But the player's actual wealth could be lower. Run the numbers. A $28 million deal in Florida, after federal tax, leaves roughly $17 million. A $30 million deal in New York, after federal and state tax, leaves roughly $15 million. The lower contract in a no-tax state is worth $2 million more in real money. Teams in Florida, Texas, Nevada, and Washington have a legitimate competitive advantage that has nothing to do with basketball. They can offer less money and still deliver more wealth. Some players and agents understand this. Most rookies at 19 or 20 years old do not. And this compounds, because athletes at this level invest their money. Every dollar lost to taxes is a dollar that never gets invested, never compounds, never becomes the passive income that sustains them after their career ends, usually before age 35. A $2 million difference at age 22, invested conservatively over 30 years, becomes roughly $10 to $15 million in retirement wealth. The tax trap isn't just costing them now. It's costing them their entire financial future. The players who figure this out, and there are a few, sometimes restructure their lives around it. They play in a high-tax state, but establish legal domicile in a no-tax state, spending the required days there to qualify. It's legal, it's strategic, and it requires planning most rookies never get. The fix isn't complicated. It's awareness. Every first-round pick in 2026 should be sitting across from a tax attorney, not just an agent, before they sign anything. They should see 2 numbers, the contract, and the actual wealth that contract will produce. The NBA creates millionaires. The tax code quietly unmakes them. And the people paid to protect these kids are sometimes the last ones who will tell them the truth. Subscribe if you want the financial education that the people around you are paid not to give you. And tell me in the comments, should the NBA require independent tax counsel for every first-round pick before they sign their rookie deal?